The IMF nudges up its 2025 growth forecast for Britain to be 1.2%. French inflation slows to 0.6% in May, its lowest since 2020. And US consumer confidence rebounds in May, breaking a 5-month streak of declines. This is the Economic Bulletin here on Qnews. We start with Europe, where Reuters has reported that the European Commission asked major European companies and CEOs to provide detailed information on their current and planned investments in the US. The 59 members of the European Roundtable of Industry were asked to outline their investment intentions for the next 5 years, with a note highlighting that the request came personally from European Commission President Ursula von der Leyen. This move is designed to strengthen the EU's negotiating position in ongoing and upcoming trade talks with Washington, particularly as tensions rise over tariffs and trade imbalances. The International Monetary Fund mission chief to the United Kingdom, Luc Uriod, has reported that the fund nudged up its growth forecast for Britain this year in a regular assessment of the country's economy. It also urged Finance Minister Rachel Reeves to stick to her plans to lower public borrowing. Growth this year is now forecast to be 1.2%, marginally higher than the 1.1% it predicted in April, before rising to 1.4% in 2026. Uriod highlighted that the fund expects the Bank of England to cut interest rates by 0.25 percentage point once a quarter until they reach a level of around 3%, down from 4.25% currently. The longer-term growth rate was also revised up to 1.4% from 1.3%. The Confederation of British Industry survey has shown that confidence among British retailers fell at the sharpest pace in 5 years, and a decline in sales volumes gathered pace as stores expect conditions to worsen. The CBI's quarterly gauge of business sentiment plunged in May, with a net balance of firms expecting their business situation to worsen over the coming 3 months, at negative 29% in May from negative 19% in February. It was the lowest reading since May 2020. Its monthly gauge of how retail sales compared with a year earlier fell to negative 27 this month, the lowest since March, from negative 8 in April, which had been its highest since October. A measure of expected sales for June fell to negative 37, the lowest since February 2024. GfK Market Research Institute and the Nuremberg Institute for Market Decisions has revealed that German consumer sentiment is set to improve again slightly heading into June. But household hesitancy to spend remains an obstacle to any stronger recovery in Europe's biggest economy. The Consumer Sentiment Index rose by 0.9 points month-on-month to 19.9 points. The rise was driven by improved income prospects in May, which factors into the survey's assessment of consumer climate for the coming month. However, a declining willingness to buy and an increased willingness to save had a dampening effect. President of TSMC Europe, Paul Debout, has stated that the Taiwanese semiconductor giant will open a chip design center in Munich, Germany. He noted at the company's 2025 Technology Symposium event that the Munich Design Center would open during the third quarter of 2025. Debout added that it's intended to support European customers in designing high-density, high-performance and energy-efficient chips with a focus on applications again in automotive, industrial AI and IoT. Still in Europe, the National Institute of Statistics and Economic Studies has reported that the French inflation fell to its lowest level since December 2020 in May, driven by a sharper decline in energy prices and a slowdown in service costs. France's harmonized consumer prices, adjusted for comparison with other Eurozone countries, increased 0.6% year-on-year in May, down from a 0.9% rise in April. Service prices rose 2.1% on the year in May, slowing down from 2.4% in April. Food prices rose 1.3%, while prices of manufactured goods remained in a negative territory at negative 0.2%. Energy prices fell 8.1% compared with a May 2024 steeper than April 7.8% drop and the fourth consecutive monthly decline as gas prices continue to fall. Inflation, measured by France's own consumer price index, rose 0.7% over the year through May, down from 0.8% in April. From Europe to Asia, the Bank of Japan has revealed that Japan's service sector inflation hit 3.1% in April, keeping alive expectations of further interest rate hikes by the central bank. Data showed that the April year-on-year gain in the service producer price index, which measures the price companies charge each other for services, followed a revised 3.3% increase in March. Bank of Japan Governor Kazuo Ueda has stated that the bank must be vigilant to the risk of rising food prices, which could push up underlying inflation that is already near its 2% target. He added that the BOJ keeps interest rates low as inflation expectations or the public's perception on future price moves stand between 1.5% and 2%. The highest in 30 years, though still below its 2% target. Ueda, however, highlighted that a renewed rise in food prices, particularly a 90% spike in the price of rice, is pushing up not just headline but underlying inflation, which is typically influenced mostly by improvements in the economy and a tight job market. He said that although the BOJ downgraded its forecast, it expects underlying inflation to gradually move towards its 2% target over the second half of its forecast horizon running through fiscal 2027.
各国の通商政策等をめぐる不確実性は極めて高い状態にあり、今後の展開をめぐっては様々な見方が存在します。
The Southeast Asian leaders are set to hold their first ever summit with China and the six-member Gulf Cooperation Council. The tripartite summit seeks to insulate their trade-dependent economies from the effect of steep tariffs from the United States. Malaysian Prime Minister Anwar Ibrahim said in his opening remarks at the 46th ASEAN Summit in Kuala Lumpur that last year, the GCC ranked as ASEAN's seventh largest trading partner, with a total trade amounting to $130.7 billion. He added that investment flows are rising, underscoring growing confidence in the long-term potential of their partnership. He further highlighted the ASEAN, GCC and China collectively represent a combined GDP of $24.87 trillion and growing exponentially, with a population of approximately 2.15 billion and growing slowly.
ASEAN has long demonstrated that regionalism, anchored in consensus, respect, and openness, can succeed. We have thrived in our long-standing partnership with the GCC and China. ASEAN, GCC, and China collectively represent a combined GDP of $24.87 trillion and growing exponentially, with a population of approximately 2.15 billion and growing slowly. The collective scale offers vast opportunities to synergize our markets, deepen innovation, and promote cross-regional investment.
Crown Prince of Kuwait Sheikh Sabah Al Khalid Al Sabah has stated that GCC is expecting trade with the Association of the Southeast Asian Nations to hit $180 billion by 2032 and expect to see an average 30% growth in trade. He added that beyond trade, it is also important to develop strategic partnerships in areas such as food security and enhancing cooperation in the digital economy. The Malaysian Prime Minister Anwar Ibrahim has stated that the Southeast Asian countries have reached a consensus to have an understanding on how to approach US trade tariffs. He highlighted that the leaders agreed that decisions should not be taken at the expense of any other country. Anwar also said that any deals negotiated with Washington would ensure that the interests of the region as a whole were protected and do not harm other ASEAN countries.
The 2025 ASEAN-GCC Summit held in Kuala Lumpur provides a platform for the Association of Southeast Asian Nations and the Gulf Cooperation Council to review and expand their cooperation. Malaysian Prime Minister Anwar Ibrahim noted that the summit focuses on strengthening regional collaboration and resilience amid ongoing global economic and geopolitical developments. Since their initial meeting in 2023, both blocs have worked to advance cooperation in political, economic, and socio-cultural fields. The summit serves as an opportunity to assess progress and discuss priorities moving forward. The summit aligns with the Kuala Lumpur Declaration on ASEAN 2045, which outlines ASEAN's long-term development goals. It also supports the ASEAN-GCC Framework of Cooperation 2024-2028, which outlines joint areas of focus such as food security, renewable energy, climate adaptation, and counterterrorism. Kuwait's Crown Prince Sabah Al Khalid Al Hamad Al Sabah stated that the GCC was ASEAN's seventh largest trading partner in 2023, with bilateral trade reaching $130.7 billion and productions of $180 billion by 2032. Negotiations towards a free trade agreement are ongoing. Together, ASEAN and the GCC and China represent a combined GDP of nearly $25 trillion and a population of over 2 billion. Discussions at the summit also highlight the potential for closer cooperation between energy producers and consumer markets. The 2025 summit marks the continuation of inter-regional dialogue and cooperation, with both blocs examining ways to respond to shared challenges and explore new areas of partnership.
For further analysis, we're joined from London by Gianluca Lobafalo, the QW Capital CEO. Welcome to Qnews Economic Bulletin, Mr. Lobafalo. Now, how does the 2025 ASEAN-GCC-China Summit align with the long-term vision set out in the Kuala Lumpur Declaration on ASEAN 2045?
Good morning, everybody. It's actually a very important meeting because it's the first ASEAN and GCC clearly meeting where we acknowledge that we very likely heading towards a multipolar world, where the dollar, who has been the center of the unipolar world after World War II, is put into question. And that doesn't necessarily have to go through a crisis, but definitely a development. So yes, we are seeing the period defined by tariff and this, let's say, interruption to a certain extent of the globalization, the trend has been going on in the last 20 years. But actually, we have to accept that we very likely going to be in a new framework that doesn't mean less development, less growth, but definitely a more balanced multipolar world. So that's key to have this meeting and what the resolution will be, because it's the very first meeting of the ASEAN with the GCC in a potential multipolar world.
Mm-hmm. Well, the GCC was ASEAN's seventh largest trading partner in 2023, with the trade projected to grow significantly by 2032. How do you see this economic relationship evolving over the coming years?
Okay, it's very likely that will be evolving in direction to grow, but we have to be careful. Here we are going towards a much higher macro volatility environment. People underestimate the relevance of the variation in interest rate and the implication on growth and any risk asset market like the equity market, because we have been accustomed over the last, let's say, 15 years, let's say since 2009 until for sure until 2022, where interest rates were at the lower bound, so zero rate, and that's meaning that there was infinite liquidity and low volatility within, even to start, central bank. Any central bank was moving in the same direction. I heard your colleague just a few seconds ago mentioning that the Bank of Japan is considering eventually another hike in rates, while on the other side of the world, let's think about Bank of England, ECB, but even Federal Reserve are considering either to hold or actually to cut rates. This is very unusual versus what we've seen since the financial crisis, where every bank was moving the same direction. It tend to be on cutting rates. So meaning that we're going to have a different financial cost, different part of the world, and that implies as well different potential leverage and liquidity in different parts of in different countries, in different markets. So the GCC and the ASEAN actually are in the center of this new trend. Is actually a key part and more relevant than what we've seen recently.
What about China? How does its relationship with ASEAN impact regional trade amid the ongoing US-China tensions? And what role does the upgraded China-ASEAN free trade agreement play in this context?
If anything, is strengthening that, because don't forget that we are talking now, for example, in tension between China and the US, but that's what simply implying is that China is strengthening its investment, its trade through with US, through Vietnam or through Mexico. What simply means is that actually there will be even more link with other part of the region of the Asian country. There have been less, let's say, indirect involvement with the China-US trade negotiation and trade linkage, but actually they will be playing a much relevant role. So at the end of the day, we have a longer route. We will have higher costs, so that's why higher inflation and higher interest rate. But I don't see anything changing between the biggest producer in the world with China and the biggest consumer in the world with the US. That is not going to change. What is going to change is how long, how far, and how fast the good will move from China to the US. That's the only difference.
Mm-hmm. Well, would we go far enough to say that the ASEAN, the GCC and China are working together in shaping a new global economic landscape?
They are definitely contributing and they are major player. Now, I'm not necessarily convinced that having a multipolar world, having a more balanced world is a bad news. It all depends how we develop that. I mean, we are accustomed to see stability, as to say stability with an unipolar world that was dollar center. And that's clearly worked well until the US didn't go into a policy of too long, a too unsustainable deficit that triggered an amount of debt where debt to GDP is now well above 100%. And that's clearly unsustainable. If we look at other parts of the world, yes, the other part of the world where there is debt, but most of the debt, like Japan, is owned by national institutions, pension funds or the Bank of Japan. The US has a 19 to 20% of ownership of the debt that is in foreign hands, and they make it very unstable. It's very difficult to manage to preserve a position of the center of a unipolar world when we have so much debt. When dollars became and replaced the British pound after World War I and established the role after World War II, we're talking about a country who had no more than 30% of debt to GDP. That's a different story, completely different story.
Mr. Lo-Befalo, now, would you say that the summit reflects the increasing importance of the regional blocs within the evolving, as you mentioned, a multipolar global order?
Absolutely, absolutely. And we're to see this as actually an opportunity for all of us sitting in London or in Europe, as has been an incredible opportunity when the US established itself as the center of this unipolar world after World War II. We're to look at the role the Asian and the GCC country can play over the next few decades as an incredible opportunity. It's not a threat, it's an opportunity.
Okay, so considering the ongoing trade war, what is the likelihood that Europe and ASEAN may engage in cooperation and partnership?
That is a given. Is already starting. Italian government is already involved with many of the GCC countries in direct bilateral agreement, and that is only the starting. For sure, Europe can play an important role. Don't forget that Europe always improves when it's under much stress. So European Union, European leaders are not particularly good in improving, in moving farther ahead when things are calm. They tend to perform well under stress, and clearly this change of eventual regime would put strain and pressure on Europe. So either Europe will find a way to have a more fiscal union and to have a more, let's say, more political integration and not just a monetary union, the more likely we can play a role as a big player in the world, and of course to be a serious counterpart for the Asian country and the GCC, that's for sure. But we have to take into account that we need to be more united. So the idea that, for example, Germany is opening to the idea to have a joint financing instrument like Eurobond, so government bond issued guaranteed by all the European countries, not just not just German or Italian bond or French bond. That is a proper step in the right direction.
From London, that was Mr. Gianluca Lo-Befalo, the CEO of QW Capital. Thank you very much, sir, for joining us. And from ASEAN, we now move on to the latest developments from the United States. The Conference Board has reported that U.S. consumer confidence rebounded in May, breaking a 5-month streak of declines. The Consumer Confidence Index rose by 12.3 points to reach 98 this month, reflecting improved sentiment amid a temporary truce in the trade war between Washington and Beijing. However, households remain concerned about the potential economic impact of tariffs, particularly their effect on prices and overall growth. U.S. President Donald Trump stated on Truth social media platform that the EU has requested quick meeting dates, which he sees as a positive step. He expressed hope that the European Union, like China, will finally open its nations to trade with the United States, even as he reiterated his threat to unilaterally impose trade terms if no agreement emerges. Oil prices eased 1.5% on Tuesday, spurred by worries of a supply glut after Iranian and U.S. delegations made some progress on their talks, and on expectations that OPEC Plus will decide to increase output at a meeting later this week. Brent crude futures were down 1.5% at $63.73 a barrel, while the U.S. West Texas Intermediate crude fell 1.7% to $60.48 a barrel. Gold prices declined for a second consecutive session on Tuesday as risk sentiment improved following U.S. President Donald Trump's decision to postpone tariffs on the European Union. Spot gold slipped 1.4% to $3,296.79 an ounce. The U.S. gold futures lost 2.1% to $3,296.1. The global market stocks showed a collective rise on Tuesday, with positive trading casting a green shadow over Asian, European and U.S. pre-session markets. In the U.S., pre-session trading S&P rose 1.63%. The Dow Jones was up 1.37% and the Nasdaq futures gained 1.99%. In Europe, the UK's FTSE 100 increased 0.76%. Germany's DAX went up 0.96%. And France's CAC 40 inched up by 0.18%. In Asia, Shanghai Composite Index inched down 0.18% and the Hang Seng in Hong Kong was up 0.43%. Japan's Nikkei 225 rose 0.51%. These were the economic news we have for now, but here's a reminder of today's main stories. The IMF nudges up its 2025 growth forecast for Britain to 1.2%. French inflation slows to 0.6% in May, its lowest since 2020. And U.S. consumer confidence rebounds in May, breaking a 5-month streak of declines. This concludes our economic bulletin for now, but please don't forget to follow Qnews on YouTube, Facebook, X, Instagram and TikTok at Qnews EGY to stay informed. I'm Henny Saif. Thank you for watching.